We will now move on to the next topic, which is equally complex. Development finance institutions are set up to take risks in developing countries. We invest where others are hesitant. Now, sometimes this means investing even in countries with active and violent conflict. How and when can investors like ourselves make a difference under such circumstances? It is now my pleasure to introduce my colleague, Bernt Brun, Senior Vice President in Norfund, who will moderate the next panel. As he takes the stage, I would like us all to give him a warm welcome.
Thank you. There are more armed conflicts today than there has been in any year previously. There's 1 billion more people living in countries in conflict than in any previous year for the 20 last years. And lastly, there are more people living in extreme poverty in conflict countries than in the rest of the world combined. So there is no doubt that there is a need for activity, investments, other assistance in these conflict countries. The more complex question is how to do it and whether investments can play a part in that job. So to help me to discuss these topics, I'm going to be joined by a fine panel. And please join me in welcoming first David Mithika from Kinyeti Capital Partners. Thank you. And Agnes Dasewicz from the COO from DFC, the US DFI. Welcome. And last but not least, Raymond Johansen, the Secretary General of the Norwegian People's Aid. Welcome. Thank you. You're up here. This for you. All right, David, I'm going to start with you. You have been the CEO of Kinyeti Venture Capital since its inception in 2012. This was a joint venture between Swedfund and Norfund immediately after South Sudan's independence in 2011. And you have been investing risk capital to small businesses in the country since then. So my first question is going to be a very simple one. And maybe difficult to answer, but in any event, is this at all possible?
You can hear the laughing about it. Bernt, just to answer, it is very possible. As you've rightly mentioned, Kinyeti has been operating in South Sudan for the last 12 years, since 2012. And we are running a profitable business. We fund projects, small and medium-sized companies that are looking for funding between $100,000 to $1 million. At inception, Norfund and Swedfund, the owners, set it up as a pilot phase to see whether this can actually work. And 1 year down the line, we had the first conflict. A few years down the line, again in 2016, we had another conflict. And this called upon the company to be pragmatic in terms of how it operates. So two things, being pragmatic and being resilient. Pragmatic from the point of view of the company, looking at the owners, the board and management, and looking at resilience from the side of the client. We funded a total of 33 companies, invested a total of about $17.4 million US dollars in South Sudan. In all this period, and we've been making profit for the last 5 years. And we're looking forward to continuing to make profits going forward.
Thank you, David. We'll get back to some of those things you mentioned, but we'll walk around the panel here, and the next question is to you, Agnes. So you are the CEO of DFC, which is the US Development Finance Institution. And as such, I know that budgets aren't your biggest constraint. You have lots of money to invest. And some of it, I'm sure, you want to invest in these countries. But to follow up on the question to David, so it's possible in certain circumstances. But what is your observation? What is your view on whether this is possible in larger scale to actually reach those people in extreme poverty and so forth?
Yeah, so first of all, really huge thanks for including us in this really important event. We're incredibly pleased to be here. And for those of you who may not be familiar with the DFC, we are the US government's Development Finance Corporation. I have to say that the reason we're very excited to be on this panel in particular is because while we do invest in upper middle income countries and in very large projects, we're also very active in lower and lower middle income countries. As a matter of fact, last year, out of the total $9 billion of investment, over 70% was in lower and lower middle income countries. That's by number of projects, but even by volume, it was more than half. So we're very much focused on those countries where we see extreme poverty and where we really need to create and support strong economies, which therefore really create stability, create future for the people who live there. I think that is very much in the US foreign policy interest, and it's very important for development. So I think investing in these kinds of, in fragile countries is very much a focus for us and will continue to be a focus for us. One of the questions is it possible? So we have, as I mentioned, placed a lot of money into these countries, and we did so to catalyze private investment. So we are focused on catalyzing the private sector to invest and to create solutions in those countries. So it's probably not as important that we are putting money there, but it's probably more important that there's private sector investment going into some of these countries. And these really include countries like Iraq. A few months ago, we closed an investment to support the Bank of Iraq to lend to SMEs. And here is also how it's possible. So as David was saying, we're trying to be practical. So when we offer guarantees to banks, we try to enable them to offer cash-based lending and not collateral-based lending, which is really difficult in a lot of those markets. So those kinds of tools that we can offer, guarantees or on-lending capital, to local intermediaries who really understand smaller businesses much better than we do, to really place that capital with the kinds of private businesses that are going to grow the economy, that are going to create jobs, that are going to create stability, and at the same time be practical about it. So enable those banks to take on more risk and also deploy the capital in a way that is very appropriate for small businesses to use it. And banks are not the only intermediaries. I think we see a huge rise in funds in just non-bank institutions that are deploying all kinds of creative capital. And I think that's the way to really make it possible and also make it reach scale.
Good time for me to mention that I do believe that Kinyeti is open for business, and you should exchange business cards quite quickly. In any event, over to you, Raymond. You have recently been appointed the Secretary General of Norway's People's Aid, Norwegian People's Aid. You are the labor, or your organization is the labor movement's humanitarian and solidarity arm. And you do great work in countries where we are present, and even in countries that are we see as maybe too risky for us. And you work with demining, you work with humanitarian aid, and you work with more just distribution as well. I hope that description did your organization justice.
Thank you for the introduction.
My question to you, a simple one, is whether you see a role for organizations like Norfund to invest in areas where you also operate, whether we do have a positive impact.
Of course, it's extremely difficult, but the first thing I want to raise that you need to understand the context. because easily in conflict you can do a lot of harm. You need to understand the conflict, the context, and you need also to do more than a normal due diligence. You need to know the different actors. If not, you can easily do a lot of more harm. Because when you enter in with private money, you can also support people, organizations that do a lot of harm, and it's an important part of the conflict. You need to understand the context. And we need to learn. Know all the Western countries we withdrew from Afghanistan just for a year ago. We didn't understand the context. We have, as you mentioned, our experiences from Iraq. And take an example, Sudan, which Norwegian People's Aid has been present for many years, also in southern Sudan, but also in Sudan, when we gave a lot of support before 2019 to the different civil organizations. And that civil organization were driving forces for the change, for the different changes that also did what they do with President Bashir. But the day after, it was for some months, he was removed. But then, after that, it has been a civil war because it was not sufficient support to these different forces, to these different organizations, also with the different private sectors, and the consequences was that this overtaking by the new forces was so fragile that it entered into a civil war and with brutal consequences. It means that and it's risky business, always very risky, but I think that to do the due diligence, to understand the context, then I think with that humility, I think you have to have that in advance. I have been a mayor of Oslo for the last 8 years, and it's in a Western country. It's in Oslo. But even here, when we are using the money, you need to know and understand the context. Right. We have had a crisis here in northern part of Norway, a conflict when the government wanted to invest in windmills, but it was in direct conflicts with not indigenous, but what you say, the Sami population. Please help me out of that.
Yep.
And that suffer a lot of problem. Even in our own country, we are not always aware of the context. We need to be aware of the context when we do our investment. And we have together a lot of examples when we with private capital also have invested wrong, giving power to wrong people that have not been able to put themselves in a position when they have been able to, for example, distribute the wealth, which is a prerequisite for an ongoing growth. So
I'd like to take that comment and sort of pose it over to Agnes. I think this is something she has been grappling with herself, or the organization has. And I guess my comment is that, when investing in these countries are not stable. So just over the past 4 years or so, there have been coups in Niger, in Burkina Faso, in Mali, and elsewhere, and in Sudan as well. So investments demands a long-term perspective. You can't invest with a view of getting your money back in 2 years. What would DFC's approach be to that? Aren't you in a danger of supporting the wrong people?
Well, there is a lot to be said for the fact that our world is really undergoing a lot of change, right? I mean, just this year, 100 countries are going to hold elections. So there is a lot that we have to grapple with. But I believe that, first of all, our main focus is the private sector, right? We are really trying to support the private sector, who then invests and builds jobs in local economies. But also, I feel that the private sector recognizes when things change, but some things stay the same. So, for example, we happen to guarantee or I should say, provide political risk insurance for a green bond that was issued by Gabon 2 weeks before the regime change there. And when that happened, we just announced that everyone was very happy. The first green bond in Africa, private investors bought the bond, it was oversubscribed, and then huge upheaval. And basically, we all just kind of sat back and said, well, let's see what happens, right? Let's just not react very quickly. And it turns out that the new government continued the payments on the bond. And the private investors were happy, and we did not pull our risk insurance from that. So it really depends. Mm-hmm. I feel that it's really on us to make sure that we do the right due diligence and the right know your customer diligence, which in a lot of these markets is critical. But I also feel this is why partnerships of governments and DFIs are really important. Because it's through information sharing, it's through joint risk-taking that I think we can make the best decisions. Instead of, a lot of these markets don't offer a lot of investable opportunities, so instead of competing for the one investable opportunity, it's a lot better to try to share knowledge, share the investment pipeline, and really make joint investments and joint due diligence, especially because a lot of these markets, it's not safe for us to be there. We have to rely on advisors. But we can share information about which advisors we trust and who really understands the local context. So I think really good joint due diligence, sharing of information, is absolutely key when operating in these markets.
David, right. Same question to you, more or less. You have invested through a regime shift. Mm-hmm. So how do you make sure that you're not supporting the wrong people? Are you able to insulate yourself from that risk?
I think key is being on the ground. It's one thing to talk about investment from outside. So for instance, Kinyeti, the team is predominantly in South Sudan, based in South Sudan, operating from South Sudan. For each business that we invest in, we do a thorough due diligence on the entrepreneur. In certain instances, you find a lot of the businesses we are investing in are Eritrean business people, Ethiopian business people who have come to South Sudan. And they're the ones who are predominantly running the businesses in South Sudan. And there's a lot of due diligence that is done for each individual, including contacts from the community, because they're a close-knit community. So not only are you checking bank statements and what have you, I think it goes beyond that. The character of the entrepreneur is key for Kinyeti. That's number one. Number two, I think when we are dealing also with businesses in South Sudan, there's always the aspect of dealing with PEPs, politically exposed individuals who come through various cronies in companies. And you really need to lift that veil and see who exactly is the owner of this business that you're investing in. We do that also with the assistance of the company lawyer who does a very thorough check. Number three, also for conflict country, particularly South Sudan, there are individuals and companies that are sanctioned. And I must say, the board of Kinyeti has been very keen on this in terms of following to ensure that management has checked the entrepreneur, has checked the different parties, be it the service providers who are also working with the companies that we're lending to, that we have checked thoroughly and ascertained that these individuals are not sanctioned, these individuals are not PEPs, and these individuals are of good integrity. That's number one. But I think important is to have a team in Juba operating through. That's what has probably saved Kinyeti a lot of grief.
But are you confident that your investments are not implicitly supporting parties to the conflict?
What we try to do is most of the companies that we fund are in turn doing contracts with UN, United Nations Organization. So in a nutshell, and including Raymond's organization, NPA, so Kinyeti predominantly lends funding to small businesses that are offering goods and services to the humanitarian sector. So UN agencies and all international NGOs. There is already a criteria that the international UN organizations and Raymond's NPA and others who've already also done their due diligence on these companies. So for us, if Bernt, you came to me and you have a government contract, chances are I may not be able to do that particular deal with you. Because there's dependence also for Kinyeti on who are you transacting with, particularly as far as South Sudan is concerned. So there's an element of comfort you get when the business is executing contracts with UN bodies, because that's another layer of check over and above what Kinyeti. Of course, we have also to do our own due diligence, but there's an element of comfort in terms of what the company is dealing with, which other parties are they dealing with. So that's how predominantly we've dealt. Strictly companies that are offering services to the humanitarian organizations.
I'm going to go back to you, Raymond, and let you have a final comment on this topic. And I guess it's kind of fair to say that if you're investing in a country which is run by a, let's say, terrible regime, that we all can agree is terrible, that in some perspective you can see that as a support to the regime, regardless of which business you invest in, possibly. So my question to you is whether you think one should just stay out of those countries where you are critical to the regimes, or whether you should have a more nuanced due diligence that enables you to invest anyhow.
Tricky question. First of all, I think it's important to remain, to be active. And there's there also a lot of other possibilities than rather support the government. You can support the civil society with different organizations, which we have done over the years. We have been present in Gaza since 1986, supporting the Farmers Union and also an organization that's dealing with fisheries. And then to be organized and strengthen their community. It's a way of also to strengthen different institutions while the countries are in deep conflict. That's not supporting the government. In contrary, but of course you cannot directly interfere into domestic issues, but it's fine ways of supporting civil society, which I think, living in Norway, living in Scandinavia, it's the strong civil society. It's one really of the driving forces for our welfare society. So it's also a model of exporting, to have visible, strong civil societies, unions, for example, which I think it's possible to support. But as you rightly said, in armed conflict, people are a part of a war economy. They are a part of a war economy, and all of us who is directly or indirectly involved into it is also all kinds of businesses linked up to that, the war economy. But to stay away, you cannot do that, because it's the ordinary people that suffering most from a conflict. We need to be present, and I think North Sudan, as an example, we need to be there. We know there are international strong actors in gold mining. So to their strengths and small businesses, which is often the most important thing, because it's closer to people and they really can make a difference.
Thank you. Agnes, you mentioned that scaling can be done maybe most fruitfully through intermediaries. David, you are such an intermediary, aren't you?
Right, I am.
And I know that we have tried to scale Kinyeti as a business. Maybe you can shed some light on the challenges in actually reaching scale for a business like Kinyeti.
I think appetite from most investors has not been there, particularly in fragile states. And fragile, I mean real fragile. I recall we tried to do some fundraising some years back, and I think we knocked on many doors. And the answer was, there's an excitement that we want to invest, but there is no action in terms of real money. And I think that's why I give a lot of credit to Norfund and Swedfund for their patience. You invested South Sudan in 2012 and 2013, 1 year down the line, you already have a war. I mean, you'd feel like you need to pack your bags and just leave. But they have been patient through it all, including 2016, and they've been able to see the company moving to where it is right now. we started off investing in relatively smaller businesses with average deal sizes of about 300,000 as we were trying to learn what the market is all about. But as the years have gone by, we've seen the average deal sizes moving towards $800,000 to $800,000 per deal, because these are businesses that we're giving first, second, and third loan. To the extent now we are looking at deals where clients are looking at facilities in excess of 1.5 million. These are clients we have funded from $300,000. Now, you're looking for $1.5 million, probably way beyond my ticket size. Okay?
I think I have to pause you. I'm looking at the clock there, 33 seconds.
Yes. Yes. So I think what I can say is there are a lot of opportunities of investment in South Sudan. And I think I would urge investors to go beyond the excitement of just we are investing in fragile states to actually investing, putting money in these fragile states.
That's a good closing line. I think I'll just end there since the time is running out. So please join me in wishing my greetings to the distinguished panelists. Thank you so much.
Thank you very much.